Hey everybody, Boris from BK Forex. Welcome to the weekly technicals for Feb 5 to Feb 9, 2018 for the majors, for Eurodollar, dollar yen, and pound dollar. And of course, the question of the week is, are we at the bottom yet for the dollar? And maybe 3 hours ago, I would have said unequivocally, unadulteratedly, absolutely 100% yes. And of course, Donald Trump hit the market. The point being is that I think if you look at the market from an economic point of view, certainly there's a massive case to be made for a dollar rally after a nice strong NFPs, strong wage gains, and essentially confirmation and assurance that the Fed is going to raise rates in March. But we're facing the specter of all sorts of political tumult out of Washington, D.C., which knocked the dollar down in the last couple of hours of trade. And you never know. I mean, the point is that you just really cannot know the political risk that's handicapable in this story, which has always been the single major factor as to why the dollar has been weak. The dollar has been weak 100% because of the Trump administration. And it remains so for a whole bunch of reasons right now that are impossible to handicap. So assuming that things are okay, assuming that we don't have a constitutional crisis come Monday, assuming that there's no blood in the streets, you could more or less make the case that the dollar is starting to bottom out, that the majors have all hit pretty much big resistance points, big support points against it, and that the flow of news and trade next week should at least provide a modicum of a rebound in the greenback. But that, of course, hangs against a very big specter of the uncertainty out of DC. So I advise you to obviously keep an eye on that and understand that that is a risk that nobody can handicap. But that we should all be aware of as we are trading what appears to be a pretty decent looking bottom top formations on the charts and a fundamental background that supports that thesis as we go forward. When we look at the levels next week, they essentially have pretty much set in stone that 2550 has now become a very, very big resistance level. 23 is support. 2250 is really, really strong support. Yen has really proven itself to have bottomed out at the 108.50, but again, it's proven itself to have bottomed out at 108.50, assuming we don't have a constitutional crisis in the United States of America. If we do, everything is off the table because you never really know what happens next. It's like a soap opera here every day. So as long as we live a soap opera life, we're going to be subject to that in the FX market. And cable is going to be a very, very interesting trade next week because of the BOE. Cable to me looks the most hobbled, the weakest of all amongst the majors, and the one that is most likely, I think, to probe that 140 support off of which it bounced the other day. So let's take a look at the charts and just see what the charts are showing us. And, you know, as I said, 3 hours earlier, they were showing very clear, unequivocal topping formation. It would be ideal. And I think in many ways, maybe we should really use the charts to help us guide as to how we want to trade next week, in a sense that really to get a true sell signal in the euro, we would like to see on a daily basis the close below this particular low, which is around 20, let's say 23.80 for argument's sake. That would create a nice engulfing pattern, or at least a complete rejection and a takedown of the fresh lows. And that would suggest that yes, we're then pretty much confident in the 25.50 top against which we can trade, and the thing could distribute perhaps at 23, 22.50. Until we get those lows printed on a daily basis, I think you kind of just have to give it the benefit of the doubt and watch it carefully. There's certainly the other possibility. Anti-dollar flows, run away from the dollar, all of those things could create a final kind of manic move through the 25.50s. And if we look on the charts, I'm gonna have to go to the monthly charts to really get a good clean view. And you can see that on the monthly charts, we have to go all the way back to 214, where we were at 125s at that point. And a clearance of the 25.50s really puts us into that whole 25.30 zone. There's really no resist till 30. So a short squeeze vortex that takes the euro through that 25.50 does not necessarily mean it's going to stop right then and there. And that's why I caution you that yes, the top looks like it's in place, but it can get blown up at any given time. And that's why, looking at the charts right now, we don't have a clear sell signal in the euro until and unless, as I said, the bottom is taken out here. We got to take the kneecaps out of the lows on Thursday, and then you would have a lot more confidence that indeed the sellers have the upper hand. Now, yen looks a lot better. And as you can see, I actually had a yen double bottom here a couple of days ago, and I was annotating my charts. And it's clear that we have a nice, clean double bottom. The 109.50 got taken out to confirm that double bottom. And as a matter of fact, it's not just a double bottom. It's a higher low double bottom, because the low here was about 108.20. And this was a 107, what was the low here? 107.30. So fully 100 points higher. That's a nice, positive formation. Having said this, though, we could still come back and try to retest these lows and any kind of risk aversion flows, any kind of problems out of Washington, D.C. But generally, I like this trade to the upside. I like the fact that I think we've turned the corner, that we have a strong fundamental flow, and we could certainly reach towards the 111s and perhaps even reach all the way out to the 111.50s. Because I think the tide, if you're just simply looking from the market from a fundamental point of view, has clearly turned to pro-dollar, and we should see better flows. Look at the 10-year, 284, 10-year keeps marching higher. If we get anywhere close to 3, that's just such a massive psychological number that's going to bring in flows into dollar-denominated assets and take us higher. Again, I sort of preface this for the 50th time today by telling you that we have this unhandicappable, unknowing political risk hanging over our heads. Assuming cooler heads prevail, the market is going to start focusing back on economics, but you never know. That is the one risk, of course, in all of these charts that we can't really handicap. Cable is a different story. Cable really looks much like a strong double top formation. This 143 clearly was the big resist point, and the fact that we kind of ended on the lows is a very positive sign for the shorts. It means that we have a reasonable chance now to revisit this 40. Now, we hit 40 a couple days ago, and it was a vicious, massive, just brutal short squeeze to the upside, just relentless. I think 150 points in an hour just did not let go. And, of course, the late shorts got destroyed. But the second time around could be the charm. And I think the reason why is because if we look at the calendar, and I've kind of gone backwards in this video today. Usually I look at the calendar first, but let's might as well look at the calendar now. If you look at the calendar, we do have a pretty decent amount of event risk that could drive cable lower, because we have the BOE on, the Bank of England rate decision on Thursday. And given the fact that UK growth has been the slowest in a decade and the slowest within the European Union, and given the fact that even the PMIs are starting to come in a little wobbly. The construction and manufacturing was wobbly, and then I think we have the PMI. Here's the services PMI coming out on Monday. Also could be wobbly. And Kathy has no view on it, but I'm going to just sort of go out of my way and say there's a chance here that I think it could underperform. All of those things are going to create a very dovish cast from the Bank of England, which could drive, especially given the fact that cable is at 140. I don't think they want to see that high and that strong, because it's very uncompetitive for them. It could drive us through that 140 level. So to me, that confluence of the event risk and the charts suggests that cable is certainly going to be one of the weaker trades of the week. And in fact, it's going to be featured in my crosses video, because I think it's going to be one of the better crosses for us against which we can trade against. As far as the dollar risk goes, there's nothing much. We have trade balance. We have ISM manufacturing, which is anticlimactic, because at this point we already know everything about NFPs. Unless this is markedly worse than expected, really not going to have any kind of impact. The only thing you could have an impact on is possibly a bullish move on dollar yen a little bit, if it proves to be, again, confirming of good U.S. economic growth and strength going forward. And then that's it. Then, second tier data. Nobody's really going to care about trade balance and industrial production data after the BOE. It's really going to be done by the BOE. So yen, dollar, cable, those are the major events for the week. Really, really, I think highlighted by the Bank of England rate decision and the weakness of cable. That's going to be the big trade as we start the week. So that's it, guys. Wish you guys the best luck, the best of trading. Boris Nossberg, over and out.